Alright, we're back again with another trading recap video. This week we ended up taking a total of 3 trades, and we did end the week up right around 2%. So we're just going to go over all the trades, go over everything we did right, everything we did wrong, and let's go ahead and jump into the video. Alright, we're back again with another trading recap. We took 3 trades this week, like I said. Monday we took a trade. Tuesday I looked at the charts, but I didn't find anything that I liked, so I didn't trade on Tuesday. Wednesday we had FOMC, so I did not trade on that day. Thursday we took we took 2 trades on Thursday, and on Friday we also took a trade. So actually we took 4 trades, technically. But we only had 3 trading days this week. So let's go ahead and jump into the charts, and let's go over all the trades we took. Alright, so first things first, this is the trade that we took on Monday. As you can see, it was a loser. So if we look at the 15-minute chart on Monday, at market open, we push up and we sweep this buy side liquidity. So for that reason, I was looking for shorts on the day, and I waited for a break of structure on the 5-minute. That happens here. This fair value gap is formed, and we continue to push down more. So then I draw, and we formed this other fair value gap. So I draw my gone box, and this fair value gap lined up perfectly with our discount price. And we push up into it. I get short. Now on this day, technically, I took 2 trades, but not really. So we got short on this candle once it hit our 0.25 retracement. And we consolidated for like almost an hour. Well, more like 30 minutes, but still. So we consolidate for a while. At one point, I was down like $70, and I closed the trade because I was like, this doesn't look good, all this consolidation. Usually when I take these types of trades, I like to see a immediate rejection, or at least strong rejection off of our fair value gap. And I didn't see that. I just saw a lot of consolidation, so I closed the trade down $70. And then I decided to re-enter because if it somehow ended up hitting my take profit, I would have, been upset because I closed out of my trade early. So I re-entered and then ended up getting stopped out. So honestly, I really wasn't upset that I ended up losing because I took the trade anyway. So either way. But I probably should have realized that we had this high up here, which was most likely the high that we were targeting. Because if you can see, we have this low in pre-market. We push up and we sweep these highs. And then when we push down, we don't sweep these highs. So that means our draw is most likely still going to be this high. And as you can see, when we push up and we sweep this high up here, we end up rejecting off of it nicely. So I think I just didn't take into account the more significant draw in liquidity, which was this high. So I ended up taking a loss. I actually looked, and on NQ, it would have been a dub if I would have taken it on NQ. But NQ didn't really look as clean to me, so I took it on ES. So that's the trade we took on Monday. Tuesday, we didn't take a trade. Nothing really looked too good. We didn't really have that much news. We did have, I think, consumer confidence or something like that. But nothing looked good. And then Wednesday, I didn't trade either because we had FOMC come out, and I did not want to deal with that. So our next trading day was Thursday. We actually took 1 trade on ES and 1 trade on NQ on this day. So let's go ahead and look at the trade on ES. This was it right here. So to kind of explain what happened, on ES, I ended up gaining like 0.5%, even though it would have hit my take profit. I still ended up gaining only 0.5%. So we push up at market open and we sweep some buy side liquidity up here, and then we push down and we break structure on the 5-minute with this candle. So this is the break of structure candle, and we form a fair value gap. So I marked out this fair value gap right here. And then the next candle we push up into it. Now, I get short on this candle right here. I was really happy with this trade. So we push down, we get a few ticks from my take profit. So usually when we're this close to my take profit, I would just move my stop to break even. But for some reason, when I saw this fair value gap get pushed straight through, I immediately thought I was going to get stopped out no matter what. So then I just closed the position around this area for like a 0.5% gain. And turns out it would have hit my TP1, and then I would have got stopped out at break even. But I would have been up a full 1% instead of 0.5% if I didn't close the trade early. Now, if this would have pushed up and stopped me out at break even, that would have been okay, because I don't want to watch a trade come all the way down a few ticks from my take profit and then just reverse up and stop me out. So this trade, I was a little upset because I closed it early, but I still had the correct bias and I still made the right trade. I just have to let it run and not close it early. So then this trade was taken at like 9:20, and I think I closed it out at like 9:30, 9:45. So that was earlier in the morning. And then this is the trade that we took on NQ. So on NQ, the same thing. We push up, sweep buy side liquidity, and we break structure on the 5-minute time frame, but that wasn't until here. I could have taken the same trade, but if you compare the two, to me, this break of structure right here and push up into the fair value gap just looks better than this break of structure, because we broke structure like just a few ticks away from this low, and on ES we broke structure like up here. So, well, technically that's a break of structure. So never mind, we did break structure up here. So we broke structure here and formed this fair value gap. Now, we never fill this fair value gap. We push down, sweep the lows, but I still have a bearish bias because we have more significant lows and fair value gaps to the downside on higher time frames. So I'm still looking to get short. I draw my gone box from the swing high to the swing low, and it almost lines up with this fair value gap, not really. But instead of taking this, I take the fair value gap, 50%. And since I can only trade one contract on NQ, it pushes down and it hits my take profit. If I was on ES taking this trade, I would have had TP1 here and TP2 here, but I wasn't. So I ended up gaining 2% on this trade. So on this day, I ended up ending the day up like $1,300, which is almost 3%. It's like 2.5%. So this day I had a pretty good day. I was happy with the trades that I took, other than exiting my ES trade too early. So those are the trades for Thursday. And then on Friday, this is the trade that we took. So it was kind of the same thing. We push up at market open. We sweep buy side liquidity. Actually, market opened down here. We push up, sweep 15-minute buy side liquidity, or I think it was 1 hour buy side liquidity actually. And then we have this huge move to the downside. We break structure here, break structure right here from this fair value gap. We got this fair value gap in this one. So I draw my gone box. Our 0.25 retracement point lines up pretty good with this fair value gap. Plus, I figured price would push up to this, and we have this inverse fair value gap too. So I was expecting price to fill this fair value gap and reject, and as you can see, we fill it almost perfectly. I get filled on this candle, and then we have this huge rejection. Now, when I was taking this trade, I was thinking to myself that if we break through this fair value gap with momentum, it was pretty likely we would hit my take profit. So we break through this fair value gap with momentum like that. And then I moved my stop to break even simply because for me to get my take profit hit, we would need to break through this fair value gap with momentum as well. But we don't do that. We start to reject off of it. So I moved my stop to break even. on this next candle, we pretty much retraced this entire move, and then I got stopped out the next candle. It turns out if I would have had my original take profit, which was here, or my original stop, which was here, I wouldn't have gotten stopped out, but I never would have hit take profit. So overall, I think it was a good trade. I think I had the right idea. And I'm glad I moved my stop to break even, because I think after having this huge down candle and starting to reject off this fair value gap, I would much rather move my stop to break even than take the chance. So this trade was a break even trade. That's the only trade that we took this day. Honestly, when I woke up and I saw this, I wasn't planning on taking a trade. Then I saw this set up in the PM session, so I was like, okay, I'll take it. Got stopped out at break even. That's fine. Okay, so I have my P&L pulled up. So I hope you can see this actually. My net P&L for the week was $870 if it'll focus. So $870 net P&L. After commissions, that's $824.20. I actually had a 20% win, 20% loss, and 60% break even. So pretty much a 50-50 win-loss on the week. $1,345 total profit. $1,345 total profit. Largest winning trade was $1,035. 3 winning trades in all. Total loss was $475. I had 2 losing trades, with my largest losing trade being $400. And my largest losing trade was $400, but my largest winning trade was $1,035. So pretty good risk to reward. I think we had a pretty decent week. We didn't get too fancy. We didn't take too many trades, so I'm happy with how the week went. That's going to be it for the video. I hope you guys enjoyed. It was a pretty quick video. We didn't take that many trades this week, and that's okay. If you enjoyed, make sure you leave a like, subscribe. I'll be posting these videos every week, so if you want to tune in, go for it. But that's going to be it, so I will see you guys in the next one. Peace.